Hello, hi, good afternoon or good evening, everybody. My name is Dr. Justine Scerri Herrera. I'm a Maltese lawyer. I work for a company called Michael Kiprianu, MK Fintech Partners, which is part of a group of companies. We have offices in Cyprus, in Greece, in Dubai, in Kiev, in London. I basically, my areas are advising and licensing in the areas of financial services, fintech, investment services. I'm also a member of the think tank, which is a government arm of the Ministry of Finance called the Digital Economy Task Force, whereby I advise the government which and how to adopt certain innovative technologies in the public sector. Just as a disclosure note, none of the companies I mentioned are for marketing purposes, and none of the advice I given should be taken as investment advice. Slide, please. Thank you. So basically, the pandemic has reminded us that we are all a part of something bigger. So it has instigated a deep realization in many that we are in fact all deeply connected and in fact highly interdependent on each other. Many agree that this pandemic, the virus, has been a wake-up call for businesses and governments worldwide. And it has revealed, unfortunately, that our markets and our supply chains are quite fragile and are quite easily disrupted. Unfortunately, this also means that the long-term value and the long-term profits of many shareholders have and will be affected, and also may diminish due to disruption of employees, customer behaviors, supply chains, government policy, and just society at large. Due to these disruptions, the intrinsic values of so many companies have and will continue to decrease drastically. So one question looming on everyone's mind is, has the pandemic caused people's social consciousness to wake up? And on a more positive note, could this possibly be a silver lining in terms of the result being an accelerated transition to a more circular, resilient, inclusive, sustainable economy? We will see. Slide, please. So what are the definitely short-term and long-term effects of the pandemic? So some of the socio-economic trends which have emerged due to the pandemic include, firstly, working from home. So businesses and governments have imposed working from home policies, which have resulted in less commute, less travel, and also less company expenses, since they don't have to pay for equipment and physical offices. Another effect is travel. So undoubtedly, travel has been restricted, and a perceived freedom, which everybody thought they have, is completely become a mirage now due to all these quarantine rules and borders opening and closing left, right, and center. So one possible long-term effect of this is that persons will get used to having these virtual meetings, and people just won't see it that it makes sense to spend a huge amount of carbon footprint and experience that jet lag for just a relatively short 30-minute meeting anymore. So we will be seeing a kind of change in behaviors and desires at the end of the day. And of course, another area which was massively impacted was e-commerce. So companies were forced to shift overnight to digital. So basically, go digital or go home. You will just simply get left behind or be replaced. This has, of course, presented many challenges. Many people didn't have proper website, payment integrations, think about delivery services, IT and operational aspects, security, also revenue. Is it worth it? Will we still, continue to make revenue and survive as a company? So this kind of e-commerce and forced shift to digital has affected all sectors. So medicine, we're seeing telemedicine, schools, we're seeing e-learning, banking, we're seeing digital banking. Also, when it comes to certain companies like DocuSign, they have just rocketed. DocuSign is in fact a company which was established in 2003. And only now in 2020 are we seeing it become such a trend. Also Zoom, the shares in Zoom have skyrocketed. Companies like Amazon were forced to hire about 170 people in just the first quarter of 2020 alone, just to keep up with these consumer demands. So we are seeing a major shift towards automation and digital. So this basically will change consumer behaviors, attitudes, and expectations from now on, and will therefore, as a result, change the way businesses operate and do business from now on. So in my next slide, I have put up a photo of, maybe some of you will recognize it, Back to the Future. The reason I have chosen this photo is because due to the pandemic, the world has been forced into this fast forward of at least 5 years. So an acceleration of digital innovation in place. Of course, to keep up with these consumer demands and the realities that we are living in, we have seen, rise of fintechs and regtech and insurtech and crypto and the blockchain, and also a lot of products which are green and sustainable because of the effect of climate change, which are going hand in hand with technology. And on the other hand, on the other side of the spectrum, we are seeing a decline of revenue of traditional companies. The World Trade Organization stated that in 2020, the income dividend globally will decline by around 25 to 40%. And also, a shocking statement was that the Royal Dutch Shell Company has cut their dividends for the first time in 8 years, since we are moving away from oil and moving towards sustainable. So more cobalt, more hydrogen, more gold, more environmentally friendly products. Since, of course, this is now on the agenda of governments to take care of our environment, we're moving towards sustainability. And of course, in the long run, this will mean even transportation infrastructure and the underlying commodities will be affected as a sort of ripple effect. I mean, every day someone will read something on the news or Bloomberg or wherever, due to pandemic, Thailand has closed down national parks to tourists, or Zimbabwe is no longer allowing mining in national parks. So this is really on the agenda of governments worldwide. And this will roll on to markets and companies and products. Slide, please. Now, in the next slide, I've put two diagrams. So firstly, I'd like to state that although most businesses and most businesses had business continuity contingency plans in place, no person could have really predicted or expected a pandemic and the overnight changes which they were made to make to survive this pandemic. And during this shift, this shock, the two main primary areas of focus for companies to survive were firstly, revenue protection, and secondly, customer retention. And also leveraging new business models. So you have to learn how to digitize, how to automate certain payments, logistics, IT, website, as I said. And also one problem over here was that many traditional companies did not see investment in tech as an investment, they saw it as a cost. So also the shift in the mindset of companies had to change. So over here in the first diagram, here I have put the diagram showing the normal life cycle many companies go through. So many companies don't maintain the growth stage because they do not have their eye on competition and they take for granted some external factors such as innovation. So most companies grow decline because they do not reinvent themselves. Here as a prime example, I think the only company which made it to the other side of the curve was Netflix. So Netflix actually started out from making DVDs and they moved to online entertainment. So they really had their eye on what was happening in terms of technological innovation. Now the second diagram shows the normal S-curve and the pandemic S-curve. Now, of course, due to social distancing and lockdown and restricted travel, there has been an accelerating disrupted and accelerated growth in existing disruptive trends, technology trends. So of course, everyone was forced to use apps such as Zoom and Slack. So of course, these shot up. When it comes to payments, everyone wanted to use contactless payments. So Apple Pay and Venmo also really increased in popularity. We're seeing a lot of digital banking because it's more user-friendly, more practical. So Revolut, Wix, Monzo, these are challenger banks who are really up and coming. So a lot of movement. Slide, please. In this slide, basically, perhaps some of you have seen it because it's been around a while. So basically, this slide shows the top fintech 250 for 2020. So the top 250 fintech have raised over 49 billion altogether across around 900 deals. And as you can see, many different industries have moved to digitization, from payments to real estate, to compliance, to accounting, asset management, insurance, crypto, lending. So a lot of different business models coming out, and a lot of them are actually being tried, tested, and adopted, even by some of the bigger players. Notably, from the top 250, Fintech 250 of 2018, by the same source, CB Insights, 37 of these became unicorns with 1 billion evaluation, 10 have gone public, 13 have been acquired, the rest have raised many, much more millions and billions in funding, and 0 have died. So these top Fintech 250 are really a group of companies to look out for. Slide, please. Thank you. So in the next slide, I have mentioned the rise of other innovative technologies, namely blockchain. The blockchain and decentralization has been around for a while. However, it has really shone in pandemic times because it has come to the rescue and solved a few outstanding solutions. Of course, everything was disrupted, from supply chains to trade. Everything was on hold. Even when it comes to tracking and tracing, this technology has really been useful and adopted by many. So as I said, for tracking and tracing of infected persons, in trade finance. Also, when it comes to tracking and tracing, a really interesting point is we are seeing governments leverage the use of widespread technology. For example, in China, the government has used WeChat in order to provide a badge of health. So WeChat is very popular in China, and basically it gives you a QR code in order to tell you it's a green light or a red light. So, governments are seeing the potential and the user base of these technologies, so they are actually using them to their advantage. In trade finance, so the WHO has stated that global trade could decline by 20 to 32% due to disrupted trade. Now, trade finance is the lifeblood of all modern global economy. So each year, hundreds and trillions of dollars in goods, assets, credit, and money change hands in support of global trade. On this note, there have been a few blockchain companies, such as R3, Trade9, and they have created this Marco Polo network. So this network connects many key players, and it automates and streamlines processes connected to supply chains and trade financing. So it has really lessened the amount of days and connected all the players involved in trade finance and supply. One of the reasons I mentioned this Marco Polo network is because it has included in its network multiple big names and big players, around 30 banks, so JP Morgan, Bank of America, all the big names, a lot of tech companies, IBM, Microsoft, also MasterCard, some CSPs. So this whole mix of very big players have leveraged technology for trade financing and supply chains. So it was truly revolutionary. We're seeing a lot of partnerships emerge as well. For example, the WHO and IBM have created a blockchain for certain purposes. Marco Polo and MasterCard, JP Morgan have sold their software Quorum to Consensus, and then they have acquired shares in Consensus. So we're seeing a lot of movement and interest. Another area I'd like to touch upon is DeFi, so decentralized finance. Decentralized finance, we're seeing a lot of movements, still quite an immature market in my opinion. So we're seeing the rise of raising capital in STOs, but when it comes to secondary markets, it's still a bit slow. Of course, there's many players involved, so it's not just about raising capital. You need CSDs on blockchain, you need payments integrated unless you're going to use stable coins. You need secondary markets on blockchain, so it's not just about a decentralized secondary market, but you need liquidity. So we're slowly moving in that direction, and there's a lot of movement. Also, when it comes to DeFi, one company who I followed recently and I thought were also really impressive were Chainlink. As I said, not marketing, just from keeping updated companies I'm mentioning. I'm mentioning them because they solved the Oracle problem. So one main problem we have in this area is external data not being connected. There's a lot of fragmentation, a lot of disconnectivity. So Chainlink is there, to connect parties and services through APIs and adding external data, so solving the Oracle problem. So in the end, result in a sort of seamless, connected, interoperable system. I mean, that is where we are going: interoperability, less fragmentization, digital economies. So that is the end vision, which now we are also seeing in higher levels. And of course, lastly, a lot of movement and interest in terms of crypto adoption. So now I think the market cap recorded last year was at about $237 billion US. A lot of movement, of course, some of the most popular ones, BTC, ETH, XRP, as much as people don't like it. So many persons could either be purchasing crypto because they like crypto or they aren't traders. Many people could be purchasing crypto because they see it as a safe haven, because they are worried that banks might fail us like they did in 2008. Also, we're hearing a lot of possible inflation, and we're actually seeing many big players like software companies and JP Morgan keep their reserves in BTC, which is saying a lot. In Germany, we're seeing that they're offering crypto custodial services due to banks offering a negative interest rate. When you see the bigger players and banks getting on board, I think it comforts more people to invest in crypto. Of course, we're seeing Libra on the horizon with its 2.7 billion user base. And lastly, we're hearing a lot of central bank digital coins being spoken about by governments, even by the ECB. This is, of course, because governments and nations' bread and butter is money. So if they feel that their money is at risk, and then they will, their control, their power is at risk. So they are also going to that direction. And also we're seeing certain players like the EU actually put away funding. This year they put 100 million euro funding for blockchain products and projects. So of course, when you're seeing that the bigger players want to leverage and use technology, it's always a positive sign. Slide, please. So where are we headed? So we are headed definitely towards digital economies, but not only digital economies, towards interoperable digital economies. So the end result is moving away from non-vertical and moving away from fragmentization. So in an ideal world, all these systems will connect together, of course. And also on the other end of the spectrum, we're moving towards sustainability and green. So in terms of investing, a lot of ESG investing, so environment, social, and governments. Many governments are realizing that they need and want to take care of the earth, as it will result in, and this will result in cleaner forms of transportation and infrastructure, so cobalt and hydrogen versus oil. And over here, I just put up a diagram by Citywire Selector which shows the top 10 performing funds in the first quarter of 2020. And as you can see, the underlying assets are technology, precious metals, healthcare, pharma, insurance, even cybercrime. Blockchain ETFs as well. Slide, please. So now I'd just like to spend a few minutes speaking about Malta. So if one wanted to contribute and set up an institution forming part of this digital economy, so regardless if it's fintech, e-money, or crypto, or investment services, Malta is a good popular choice of jurisdiction. So in terms of fintech, Malta's home to the 3rd EU country with the most payment service license granted. So e-money and payment institution license, we are the 3rd most popular. I think the 1st most popular is England, but now because of Brexit and passporting reasons, they're of course moving to other EU jurisdictions. Also, we have a lot of local initiatives such as sandboxes by the MFSA, which is a local regulator, where people can test their products, regardless if it's just fintech or DLT based. So of course, that is also positive. In terms of crypto and DLT licenses, it was a long process to get the law in place, and there were a lot of middlemen which needed to get regulated. However, last year there have been quite a number of applications submitted, and in the coming weeks we should see the first massive batch of crypto licenses approved. So crypto exchange, launching a token on the market, broker, custodian, raising capital. Notably, there are also a number of big players in Malta, such as Exante, which are a broker company, Stasis, which is a euro-backed stablecoin, New Fund, Microsoft, IBM, Credarax, Typico. And of course, if your interest is investments and funds, Malta's home to around 600 funds, which are registered with a net asset value of about 15 billion. Slide, please. Some other reasons which persons like to choose Malta as a jurisdiction of choice is one, the English language. So from regulators to CSPs to banks to laws, everything's in English. Of course, we are part of the EU, so it's easy to passport to all other 27 countries. We are known to have quite a friendly regulator. When it comes to tax, effectively after tax rebates, it's 5% corporate tax on dividends for non-resident shareholders, and 0% for holding companies if you are non-resident shareholders. We also have some good tax structures when it comes to funds. When it comes to investment and citizenship opportunities, we have been voted #1 best country in the world in terms of best citizenship investment programs in 2020. You need about 900,000 in terms of investment amount, and the average time for getting the passport is about 12 to 14 months. And of course, the 300 days of sunshine. Malta is a sunny island, so it's always nice to visit on your business trips. Slide, please. Thank you. Lastly, I'd like to touch upon how Malta is doing post-COVID, post-pandemic. So according to the IMF, International Monetary Fund, Malta is projected to have the less economical damage from all the European member countries, and also the country to bounce back the quickest in early 2021. Next slide, please. So that's it from me. I hope that you enjoyed my presentation. I always prefer to speak in person. However, I hope that this was of some value and insight, provided some good insights for you. If you'd like to get in touch, you have my email, my LinkedIn, and my contact number. Feel free. And I hope you had a successful conference. Thank you very much.